These are 5 reasons why you want a good credit score. I'm Josh.
I'm Carlos, and welcome back.
We're excited to talk about this topic because maybe growing up, you've heard of the topic of credit. You maybe have credit card debt. You have maybe 10 credit cards in your wallet, and you never understood what the heck is a credit score? What is credit? How can I use it to my advantage? And why should I have a good credit score?
And I think this is very important because one of the first things that you get introduced when you're in college, well, mainly my perspective, was booths, and there was always credit cards, and they always tell you just open up a credit card, it's not a big deal. Or you go to the store, you want to save extra 10%, open up a credit card, and no one really knows what they're getting into until it starts affecting them.
And just like that picture right here shows, excellent credit 800, poor 360. It could be very overwhelming because you don't want to be in the low end, but you also probably might have that pressure like, oh, I got to have a perfect credit score too. So let's talk about number one. What is credit? Credit is simply, it's someone's score. When you're in school, you get a score, you get a grade, A, B, C, D, etc. With credit, credit is basically you borrowing money, mostly from a bank. So let's just say I'm the bank. He's just a regular person. I give him $1,000. He has now established credit because he's borrowing money from the bank. It's $1,000. But here's where it gets tricky: is that a lot of people view that $1,000 as their income, and they start spending it like if it's their money. No, it's not your money, because that's where we get into credit card debt, where right now we're over $1 trillion in credit. It's just really crazy how much debt we are in right now. So 5 reasons why you want to have a good credit score, and I'll talk about how you can get a good credit score. But let me tell you the benefits why you want it. Lower interest rates. So that applies to everything from buying a house to buying a car.
You know what else I realized when I was getting into credit score, because I went from being like a good average credit, and then it dropped because I was really bad. But it affected even when I bought a phone with my phone provider. They checked my credit score, and based on that, some of them gave me a higher price than others. I didn't know that.
It could affect so many. Like if you have a good credit score, you're gonna get low interest rates. That means you're gonna be able to borrow money to buy a car, to buy a house at a lower cost. So it's gonna save you a lot of money in the long term. It's going to give you access to the best credit cards, the best rewards, even insurance discounts. When you apply to an apartment, if you have bad credit, they're not going to want to take you in as a tenant, because that just shows you're irresponsible.
Yeah.
So these are just some reasons. There's obviously a lot more reasons, but the main thing is it's gonna make money less expensive for you when you have good credit, especially when the 2 things that everyone buys: a house and a car. 3. Rent an apartment also. It's going to make life a lot easier. There's some jobs, especially if you work in finance or big companies, they'll even check your credit.
Background check,
Yeah, background check, credit check, everything check.
Yeah, and I think it's very important. Like for me, I use my credit card for everything, for safety reasons, and it's helped me improve a lot my credit score, because I went from having, I think, like 740, and then something happened with my apartment that it dropped to like 400 and something, my credit score. And it dropped like in a couple of months, and it took me like 4.5 years to bump it up to close to 800s. So it could drop as instantly as that, and it takes a long time to try to fix it. But it's been the best thing, because I was able to, there was an opportunity with Tesla that they dropped the interest rates to 1%. And because I had good credit score, they gave me that. And if I didn't have, they have an available 1% interest rate. But if you don't have that credit score that they approve, you won't qualify for that. So your car is going to be even more expensive.
Yeah, and it's so important. I mean, at the end of the day, people say, cash is king, credit is not. Well, Dave Ramsey says that. But at the end of the day, credit is important because it's going to help you get access to all these different things. But it's not the most important thing, because you could have the best credit score and be a broke couch potato, because credit doesn't define wealth. Credit just means you're responsible with debt. That's all it is. And there's people out there that have terrible credit, but they're multimillionaires. So don't get too caught up in the idea of like credit is everything. I need to have a perfect credit score. How about have a savings? Be good with your all your expenses, your income, and after you can start thinking about credit. But if you don't have an emergency fund, you're going to be dipping into that credit card, and it's not going to be fun.
So will you just suggest someone to, when you go to Nordstrom or Target and they ask you, do you want to open up a credit card to save 50%? What do you say?
I say hell no, because number one, it's not even a good deal. 10%, it's never 50%. It's always like 10%, 50%, 20%, and some people take that on a $20 purchase. You're saving $2. Like really? For them to run your credit and open a new credit card? No. And then store credit cards are the worst credit cards because they're very limited. like
It's just for
the
their
credit
store.
limit, and
Yeah.
sometimes it's just for their store. So it's like it's useless. It's
Yeah.
useless. You just want to have one, at least to start off. I know there's some people out there on social media that say you need 20 credit cards, one for this, one for that. If it's already overwhelming, life is already overwhelming as it is. Just imagine trying to manage all that.
Yeah.
Just keep it to one. Eventually, if you want two, because maybe one is good for cash back and another one is good for travel, right?
Yeah.
But stick to one.
Because one thing that I learned is if you don't use that credit card after a couple of months, maybe a good year,
They'll
take
close
it
it.
off, right?
They'll close it, and that
And
can
that'll
affect
yeah.
negatively. Yeah.
Yeah, I did not know that. And that's why even because I have three. One, because I opened up with my dad when I opened my, I think at 17. And then someone told me to get another one for Best Buy, and I do buy electronics. And then I have another one with my other bank now, SoFi. But sometimes I forget. So I automated at least the first one that I opened up with my dad because it's been like almost 15-year history, just $1 every month. I mean, every year. Because
Yeah.
I don't want to lose that credit score or that history that I build up with them.
Yeah, and there's so many different things you could do so you can maintain that relationship with that bank. Because like we talked about why credit is important. How do you maintain a good credit score? Because you mentioned something about good credit history. Because like there's a lot of people that don't realize that first credit card you get. Because I still have mine. When you turn 18, it's good to have that one still open. Because you have all that history, and the moment you close it, you're wiping out that history. That even if you weren't spending that much or using it as much, that history is super important because your credit score is made up of your credit history, your payments, paying on time, all those things. But the biggest thing is your credit history and you're paying on time.
Yeah.
So that's how you get a good credit score. Don't miss payments. Pay off any balances. I know they tell you the rule of thumb is 30% of your credit limit, which means if you have $1,000 credit limit from the bank, keep it at $300 or below. But I always try to strive for 10% or below. And obviously the best is, zero. But you still want to use it here and there for basic necessities, groceries, gas, all that. Stuff that you know you're going to pay for it as soon as you use a credit card for, like you said, safety, for fraud protection. And then you go and pay off the balance.
Yeah, especially because I see on TikTok and social media that all these, because I still have one car that's gas. You go at the gas and they say like the ATM machine might be a little loose because people are scamming out there. So that's the only reason, because I did have a situation where they took out I think like $200, and now I use my debit card only as a necessity, but credit for everything. I almost wish you were able to bundle your credit card because like that one that I got in high school, it's worthless. I wish there was a program that you're able to like, put them together and just make it into one. But yeah, it's the best one because 15 years.
Yeah, I mean, some little tips that you could do is like if your credit limit, let's say that it's only $1,000 and you've been there for like a couple of years, you're like, man, like,
Call.
you could just call them and ask them for an increase. They'll ask you like, oh, what's your income, and just general questions.
Yeah.
And most cases they'll increase it.
But if you have good credit.
Well, yeah, if you have bad credit, they're like, oh, I'm sorry, like we can't increase it.
Yeah.
So there's some benefits to having a good credit score because if the higher your credit limit, that means 10% of 1,000 is $100. 10% of 10,000 is $1,000. So you guys get the point. So you could use a bigger balance, and it won't affect your credit score as much because your limit is higher.
Should you pay it off at the very end your credit card, or should you do it throughout the month?
Oh yeah, there's people that say like, oh, if you pay it on this date, it'll go up or down. I just say just I mean, at the end of the day, just pay
Whenever
it
you
off.
can.
Yeah, just whenever you can, but also like. Don't worry too much about those small details because at the end of the day, you don't want to. I mean, it's not that you don't want to, but you shouldn't stress out about trying to have a perfect credit score. I think a good credit score is for most loans, like to get a house and all that,
Sevens.
like high 600, 680 and above. But if you're at a 700, 720, 715, 730, 750,
Chilling.
780, you're good. The 700 and above is a good credit score.
Yeah, I did notice because, like I said, I went to a part where I had like close to 400 credit score, and what helped me a lot was because someone told me is pay it off every week, because that shows not only you paying it off, but you could pay it off multiple times, and it just looks good, and it did help me because when I wasn't doing that, it felt like it was never going up until I started paying more multiple times a month. It did help.
Yeah, being active on your credit card. And then if you're probably there wondering, how do I even review my credit score? I mean, there's apps out there.
Yeah.
You got Credit Karma. Your banks, I mean, my bank is connected to my
Notifies
credit
me.
score. So a lot of banks are now letting you know what your credit score is. You can review your actual credit report on annualcreditreport.com. There's just so many ways that you guys can do it. You can go directly with Equifax, TransUnion, and Experian,
And it's good to check every month. Like I think,
Yeah.
or at least every 4 to 6 months.
yeah,
you know?
like quarterly, I guess.
Yeah.
Yeah, so you can see if there's any like, oh snap, like I didn't buy a house in Florida, or something like that. That's a mistake, and you call and get it fixed.
Yeah.
So yeah, the most important thing with credit is you could be really broke and have a perfect credit score.
Mm-hmm.
You could be really wealthy and have a terrible credit score. So credit does not define wealth. That's one thing that people have to realize. That credit is just a tool that we can use to get access to different services. Some people use it so they can travel for a lot cheaper. But at the end of the day, if you don't understand it and you don't use it right, you're going to get in a lot of credit card debt. That's what we want for you guys to avoid. And if you just can't handle that credit card, get it, cut it up. Like even if it affects your credit
Especially
score.
the store ones.
Yeah, if it affects your credit score, who cares? Because at the end of the day, would you rather be debt free and have a bad credit score, or be all this credit card debt, but you have a 700, 800 credit score?
But you gotta pay off the amount. People are gonna
Yeah.
go in like the one they have the biggest amount.
Oh, of course.
Pay it off.
You don't want it to go to collections. Yeah. So make
Pay
sure.
it off first.
Yeah, definitely. Or
Yeah.
talk to them. See if there's ways that you can work around it.
Yeah.
They'll figure out a way for you. Don't just, bye bye.
And what's like the number one method that we always teach at Avance to paying off? Like if you have a lot of
Oh.
credit cards.
Well, there's two ways, but
Yeah.
the best way, in my opinion, is the snowball method. Because let's just say you have 3 credit cards, one that's $10,000 balance, $5,000 balance, and then $500 balance.
Mm-hmm.
Most people would try to pay off the $10,000 balance because that's the biggest balance, and you're paying more interest probably. But it's actually better to pay the smaller balance first. And what I mean by this is you pay the minimum on all of them, so you make your minimum payments. But on the smaller balance, you try to make extra payments, pay off the principal. The reason why is because it builds momentum. You'll pay that one off super fast because it's only $500. You go on to the next and to the next and to the next. It's like a snowball going down a mountain. It's gonna get bigger and bigger and bigger.
And it feels nice because when I was there, like it feels nice that I paid off this one and then that one, even though there's still like one that has like $7,000 or $8,000.
Yeah.
Yeah.
Momentum. Yeah, because if you just focus on the interest and trying to pay off the balance,
It's hard sometimes.
mathematically it's smarter, but mentally it's gonna hurt you,
Yeah.
and you're gonna be like, the balance is still so high, like it's taking forever.
Yeah.
So that's why we always, there's 2 options, but what we've seen more results is the snowball method. You build momentum, you pay off that debt, and then you can finally be debt free, which is what we want for all of you guys. So yeah, this is the bottom line. This is with credit.
Mm-hmm.
It's a good to have good habits with a credit card. You want to make sure you're a good manager of your finances with that credit card. That's the most important thing. And let us know if you have any questions about credit or anything like that. And yeah, we'll see you guys in the next episode.